This market printed one of the cleanest Killzone setup I have seen in months. And most traders missed every single entry. Let me show you exactly where they get trapped and how you could have catch the moves. Hello traders, welcome back to Facebook. My name is Juliet, and here we teach you simple and practical ways to trade financial market and stay profitable. If you are new here, kindly hit the like button, subscribe, and leave a comment below. Let's get into it. Today, I am breaking down the key zone strategy that completely changed how I trade. I am talking about Asian liquidity grab, London reversal, and the New York continuation moves. The same market flow institutions use every day. This is one of the cleanest and most predictable price behavior. And once you see it, you will understand why your entries are late or wrong. Understanding key zones. First, let's break down what key zones actually are. Key zones are simply high volume time windows where major financial sessions overlap or open. The zones are predictable because they represent when banks, institutions, big players enter the market. The time zone I'm using here is what? This is Asian key zone. It starts by 1 a.m. to 5 a.m. London key zone, 8 a.m. to 10 a.m. and New York key zone, 1 p.m. to 3 p.m. These are time with high volume or high volatility. We call it high volume time windows, which is characterized by overlap or when market is opening. These three windows will show you where liquidity forms, where the reversal happens, and where the continuation begins. That's what these three zones will show you. And I'll still explain and show it to you as we progress in this video. The indicator I use here is Asian range by Nico 948. You can look out for it in the indicator section. Asian key zone, liquidity creation. Now, let's look at the Asian session. This session is slow, tight, and usually form a range. And that range becomes liquidity pool or areas where liquidity is being formed. This is Asian for the day. And this range becomes a liquidity pool. Mark the high of the Asian range and the low of the Asian range. You can see consolidation here. That's a liquidity. And you can see this week here. That's also a liquidity. This is where most traders go wrong. They try to trade inside this range. But the smart traders wait. Why? Because this is the range that holds the liquidity. All of this holds liquidity. Price needs to come down and sweep this liquidity before you can see any serious move in the market. This right here is a liquidity sweep. The market grabs this sell side liquidity. And this is the first sign that this London session is about to deliver a cleaner move. London key zone, the reversal. The London key zone is the most important part of this strategy. This is where banks come in, reverse the move, and create the real direction for the day. Most times, the London key zone creates the high of the day, as you can see here. This is the high of the day. And sometimes it will actually create the low of the day. It depends on the direction of the market. But I'm going to focus on this particular scenario. This is the high of the day. This is London key zone grab liquidity created by Asian low. And this is the sharp reversal. This is the weak and a reversal. You can see this momentum candle that reversed the market to the upside. This is actually a pullback, which come to create this equal high here.
leaving this liquidity to be grabbed in future. Immediately this high of the day, which doubles as an equal liquidity, is created, the trend of the day is set, and you see price coming to the downside. This pullback right here is the gold. So if you didn't get a trade here, this is where the main setup lies.
The New York key zone, the continuation. The New York key zone continues what the London session started. Most traders blow account here because they chase every candle.
This is price pushing to the downside to continue from where the London session ended. It cleared a fair value gap during the time of this trade, a fair value gap here, then tap into this demand zone. Now, when it comes to New York session, it does basically two things. One is to continue from the London trend, as you can see here, where the London session started, as you can see in this chart, or to grab liquidity before continuing. These are the two basic things the New York session does. This is a push to the demand zone. So this continuation is what smart traders catch. If you look at it, it's clean, logical, and follow the key zone structure perfectly. It started from here, the Asian zone, where we saw the liquidity, and the liquidity was grabbed during the London key zone here, and the pull price back, then reverse it, while the New York session continues the trend down to this point.
This is the exact flow institutions follow. Once you see this daily structure, trading becomes easier. How to trade this setup step by step.
Mark the high and the low of the Asian session. Wait for the liquidity sweep. Wait for a break of structure. If possible, enter at the end of the pullback. Hold your trade into New York continuation. That is it. No overthinking, no indicators, no confusion.
To get the cleanest result, follow these rules. Only trade pairs with clean kill zone behaviors, EURUSD, GBPUSD, gold, that's XAUUSD. Avoid trading against the dominant structure. Avoid trading in Asian session. Always wait for confirmation. Only enter after a pullback. This strategy rewards patience. The fewer trades you take, the better the accuracy. Don't forget to share this video, hit the like button and subscribe till I come your way again. Thank you for watching.